Hello again, everyone. This is Ken Martinez with Mark Investments, introducing the next videos in our cash flow calculator series, Strategies with the Note. This first tab, the 10bii, all this tab does is give you the Microsoft Excel version of the 10bii calculator. Everything's exactly the same. Again, the blue cells are input. Because this is a spreadsheet and not a calculator, I do need to give you a formula for each of the functions on your calculator. So there's 5 things we look at. There's 5 different rows with a formula in each of the white cells here. But it works just like you would think it'd work. Change the interest rate here, and the number of payments is going to change, and because that's where the formula is. If I change the n here, the present value is going to change. Say I change that to 280, so that the PV is going to change. Anyhow, you just input what you want to put, and the white cell, that's where the formula is, that is what's going to change. So I won't go into too much detail because this is really just an exact copy of the calculator, but you have it in an Excel format. And then I did a couple quick examples here of using a calculator. For example, if you want in 3 years you want to hit 75% was your goal, you'd have to average 20% or 19% annual or monthly. Same thing if you want to get back to 0 and you lost 75% and your time frame was 3 years, you'd have to average annually almost 59%. On the right side, I just gave you, given a sample cash flow, put in the 4 values. Here it's calculating the I for you. But put in the 4 values, and then it'll calculate the I. And based on this specific cash flow, let's say this was a real loan and the value of the collateral of the house was $90,000. So now you can start to answer the questions, some of these like underwriting questions on what should you pay for that note. Like a question is, what is the price if you want to get instead of 8%, which is what it's showing here, 20%? And here's your answer. Or what about if you want to buy at a specific percent of the unpaid balance, or the collateral, or you just want a cash dollar discount? So these are like 4 criteria, the 4 common criteria you want to ask, and then you can kind of combine them here. These 1, 2, 3, 4, saying if your criteria was you want at least a 20% yield, and you want to pay at most 40% of the UPB, and you want to pay at most 45% of the collateral and at least a $60,000 discount, then the most you could pay would be $40,000. That would satisfy all for $40,500. So you can see as you start to play around with your calculator, you can start to really create scenarios that would satisfy multiple underwriting criteria. And that's the calculator. This next tab is a bit more advanced, it's kind of a step up, but what we're doing here is a 3-step process. So you just kind of input some values. I'm using that same note as before. And if you need to calculate something, click here and it'll calculate for you. Right now I have it selected on I. So then you have a specific cash flow, and what this tab is doing is what happens to this cash flow if you start to adjust one of the 5 functions here, NI, PV, payment, or FV. And for this specific example, I'm going to say what happens to this cash flow if I decrease my N 10% and decrease my present value. And that's what these 4 areas are down here. Depending on what you select here, this first scenario is really going to recalculate N based on these. Now you see the 8% is carried down because I said I wasn't going to change this, but I am decreasing this 10%. And so you'd get a different answer down here if you wanted to recalculate the PV based on everything else. You look down here, the payments down here, but in the interest of time, let's just look at the second area. So again, we're decreasing our N 10% and PV 10%. And how does that affect? We're calculating the light green area, the I. How does that affect our interest, our yield? Well, you can see we started out with 300. If we bought 10% of the payments for 10% of the balance, that would actually increase our yield 10 times, 10 times 8 or 80. Well, that's pretty interesting. What if we did 20%, right? 1/5. If you bought 1/5 of the payments for 1/5 of the balance, that would increase our yield 5 times. So there's a little bit of a pattern. What if we did 1/2 of the payments down here? If you took half the payments for half the balance, what does that do to our yield? Well, that doubles it to 16%. Anyhow, so you can run any scenario depending on what you select over here and what area do you want to focus on, the payment, and you can pretty much analyze anything you'd ever want to regarding a specific cash flow. The next tab is the net present value. And what this is great for dealing with not only just a regular series of payments, but maybe an irregular. For example, what I have listed here, I have a payment in the first month, and then I'm skipping a couple, then I'm increasing, decreasing, kind of all over the place. What this does says, this answers that age-old question, would you rather have this payment stream discounted today at this rate, or would you rather, in this example, take the $1,300? Well, the present value of these at 15% is $1,253. Your initial investment is $1,300. So since this is negative, if your goal really was 15%, then you'd rather have the $1,300 rather than the payments. When these two equals 0, that's your internal rate of return. And I put a little graph here to help you figure out visually where the internal rate of return here, and you could tell it's just over 9%. And then you can kind of see visually that your 15% was in the negative area. That's why in this example you would rather take the initial investment, at least if this was your goal. But maybe if your goal was 6%, this would be in the positive, and then you'd rather have the payment streams. So you can input for any cash flow, and you look at the graph and it'll automatically tell you what you should take, the initial investment or the payment stream. The next tab is really a step up from that. It incorporates, you can analyze up to 5 payment streams. And for this example, I have 5 payment streams where the initial investment is $900, and then I have $1,000 spread out over the next 10 months in 5 different ways. So the question is, what is the best, if you wanted to purchase one of these cash flows, what is the best one to purchase? What's the best yield? 5 different ways to look at it. You could just look at the total cash flow here. Now, these are all 1,000, so not really telling you much. And the problem with this is it doesn't incorporate the time value of money, but that's still one way. You can look at the internal rate of return, and in this particular case, you can see number 4 is the highest. So if the internal rate of return was your criteria, this would be the best one. Although it doesn't give you a dollar amount, so it really doesn't incorporate magnitude. Net present value does, but it doesn't give you the quality, it doesn't give you the rate. In this particular case, you can see the net present value with the highest is still number 4. So it looks like number 4 is the best in terms of the best investment. And you can see down here, and that's because you're getting your money the quickest, all of your money the quickest compared to the other 4. A couple other things I'll mention briefly is, another thing you can look at is the cash multiple. That's just how many more times is your total cash flow over your initial investment. Now these were all the same, so that didn't really tell you that much, but maybe it's not. And then the BCR, which is the benefit cost ratio, and I have some brief descriptions over here. It's just actually a good measure to look at too. In this case, you can see 2 and 4 are tied, so you needed to go down to a tiebreaker like your internal rate of return or net present value. But the BCR is really the present value divided by your investment, so it gives you both magnitude and quality and efficiency. So this is actually a good measure too. Anyhow, for you can evaluate up to 5 cash flows. And that's it for today for Strategies with the Note. Again, if you want to know how you can invest in this cash flow calculator for your own business, send an email to mark55llc@gmail.com. Again, this is Ken Martinez with Mark Investments. Thank you.